What's going on with Xterio right now? The chart sits deep in the lower ranks, volume is thin, sell pressure has dominated much of the recent action, and yet you'll still find people arguing this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. It's occasionally back in conversations because of the Web3 gaming narrative, the focus on high quality titles and digital ownership, and the simple fact that any project trying to combine traditional game publishing with blockchain still draws attention in a market that cycles through GameFi stories. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on XTER. I actually read them. Looking at ratings and signals, almost everything leans negative to strongly negative. Algorithmic scanners, community sentiment, and pure technical tools have little positive to say about microcap tokens with this profile. There is virtually no traditional analyst coverage, so most of the ratings come from chart-based systems and on-chain observers, and those stay defensive. Short-term outlook from the technical side remains weak until price can actually build higher highs and higher lows with meaningful volume, something these tokens rarely sustain once the initial wave of attention fades. Xterio is a Web3 gaming ecosystem and publishing platform that aims to bridge traditional high-quality games with blockchain ownership. It focuses on developing, publishing, and distributing games across genres, integrating digital assets, marketplaces, and AI-enhanced tools while giving players true ownership of in-game items. XTER is the native utility and governance token used for marketplace transactions, staking, rewards, in-game activity, and ecosystem participation. It currently ranks far down the market cap list with a circulating supply in the low hundreds of millions out of a 1 billion maximum, and the price has been trading near the levels you are seeing after a sharp decline from earlier highs. On the technical side, the bigger picture for a token this far down the rankings is typically a short, sharp run followed by a rapid cooling or long periods of quiet. Price action tends to be highly illiquid with large percentage swings on relatively small volume. Any upward moves often get sold quickly, and support levels are fragile because there simply isn't deep buying interest. Momentum indicators, when they can even be read reliably on such low liquidity, usually spend long stretches in weak territory. Short term, any bounce looks like a low liquidity reaction rather than a genuine trend change. You can argue that at these ranks, the downside is limited by lack of interest, but the chart itself shows the classic pattern of a token that has already lost most of its initial heat. Retail often gets trapped exactly here. Buying the Web3 gaming and ownership will matter argument while the larger trend stays quiet and attention stays elsewhere. Risks are extremely high. Volatility is extreme because liquidity is so thin. A small amount of selling can move the price a large percentage in either direction. Downside is theoretically limited by how low the ranking already is, but in practice these tokens can keep drifting lower or go completely quiet for long stretches. Retail traders love the long-term gaming and digital ownership story and end up holding through multi-week or multi-month declines. Thin liquidity means exits can be difficult, and any remaining larger holders can still pressure the price. There is also the structural risk that comes with early stage gaming platforms. The narrative has to translate into real player activity, real game success, and real demand for the token. Otherwise, it simply fades. Here's the real debate. Is XTER actually undervalued at these levels, or is this a classic value trap after a short-lived or long-faded narrative run? One side points to the gaming and publishing model, the focus on high-quality titles and digital ownership, the AI integration angle, the low absolute market cap, and the idea that any renewed attention on Web3 gaming could send forgotten names higher. They argue that at these ranks, the risk-reward looks asymmetric if attention attention somehow returns. The other side says look at the history and the market structure. Tokens built around early GameFi platforms and publishers often struggle once the initial hype cools. Volume is low, mindshare is minimal, and there is no strong visible catalyst that would reverse the decline. That's the classic trap. The technology story still sounds forward looking on paper, the protocol still exists, but the market has already moved on and treated it as largely irrelevant. Bull case versus bear case is stark. Best case, the Web3 gaming narrative gains genuine traction. Xterio sees real adoption of its titles and publishing tools, and broader market risk appetite returns to playable digital asset platforms. In that scenario, you could see sharp percentage moves higher simply because the market cap is tiny. Worst case is the more common path so far. Volume stays low, attention stays elsewhere, and the token continues to drift or experience occasional illiquid spikes that get sold. In that scenario, the undervalued conversation just becomes background noise while price remains largely irrelevant to the wider market. Short term, the picture still looks weak and reactive. You would need to see sustained volume and a clear change in market structure before any short term buyers could flip with confidence. Longer term, it comes down to whether Xterio can convert its gaming and publishing model into actual user activity and sustained demand for the token. That's the only realistic path that turns these levels into something other than a long-term afterthought. Nobody knows which way this resolves. The chart has been weak, the narrative has not yet translated into lasting demand, and the token sits deep in the lower ranks. So the real question is simple. Is this the kind of project that can somehow stage a comeback from the lower ranks on the back of Web3 gaming and digital ownership? Or are we just watching another early stage gaming platform token that peaked early and never recovered while people keep arguing about valuation?